Good day, grade 12 learners. Welcome to today's accounting lesson. My name is Sifiso Buthelezi. This lesson is brought to you by the Gauteng Department of Education, the Free State Department of Education in collaboration with Pagama Research and Development. Grade 12s, welcome to today's lesson. My name is Sifiso Buthelezi. The topics for today will be the cost accounting as well as the budgeting. Under the cost accounting, we are going to be looking at the production cost statement, the unit cost calculations, the analysis of these unit cost calculations. We are also going to be looking at the cash budgets. Now, grade 12s, let us look at the objectives for this lesson. At the end of this lesson, we should all be able to understand the structure of the NSC November paper 2. Everyone by the end of the lesson should be able to prepare the production cost statements as well as the notes and other relevant calculations to the production cost statement. We should also be able to calculate and analyze the cost accounting unit cost. Should be able to complete the debtors collection schedule. Obviously, that will go together with the creditors payment schedule. Later on, we are going to embark on an exercise where we are going to be completing the cash budget or calculating figures that should be recorded under the cash budgets. We are also going to be calculating these figures for the cash budgets as stated earlier. Now, grade 12s, let us look at the structure of paper 2. Let us look at what is it that we need to expect in your NSC paper 2. There will be 4 topics. These topics are as follows. You will find your reconciliations. What will you be seeing under reconciliations for your paper 2? You need to know or be able to answer the questions on a bank reconciliation, that is the BRS. You should be able to answer questions on the creditors reconciliation statement, that is CRS. You should also be able to answer questions, calculate or prepare the debtors reconciliation statement, that is DRS. That is our first topic that we expect to see in our paper 2. Number 2, you should be able to do calculations and answer theory questions on the VAT, the value added tax. These are the topics that you've been covering throughout the year. Value added tax is the topic that you covered in term 3, some of you covered in term 2. You are going to also be tested or assessed on the stock valuation. Next topic will be the cost accounting, which we also call as manufacturing. That is a topic. Remember, what are we going to be finding under cost accounting? We will find our production cost statement. We will find our calculations for the notes under production cost statement. We will also find the break-even point calculations and comments, as well as other unit cost calculations as well as comments. Lastly, or second last, we are going to be finding what we call as budgeting. What do we mean by budgeting? It's where you will find your cash budget. It's where you will find your projected income statement. It's where you are going to find your analysis and interpretation of your cash budget as well as your projected income statement. Lastly, we should be able to know how to answer the question on fixed assets. It's where we are going to be seeing our note number 3 as well as the theory questions. So we should be able to calculate our depreciations, our carrying value, our cost at the beginning, at the end, our additions at cost, our disposal at carrying value. We should also be able to do the T accounts, the vehicle T account, accumulated depreciation T account, for us to get certain figures under the fixed assets. Lastly, under fixed asset again, we should be able to answer questions on problem solving, where you are given different assets and then you identify a problem, come with an advice or reason, and so on. These are the topics for your paper 2. Now, let us move on. We're just going to shoot straight today because we are on our last stage of our lessons. We are now going to be doing more and more of practice, because we have been doing theory on these topics. Right now, what we are doing, we're just going to be practicing, meaning on the upcoming lessons, it will always be practice, tips, coaching, and all of that. Now, we are going to be looking at a paper coming extracted from the National Senior Certificate, November 2023, paper 2. So right now, we are busy with our cost accounting. We are going to do a couple of activities under cost accounting, or a couple of questions under cost accounting, and then we are going to move to our budgets. Now, let us look at our question here. Question 2 for 35 marks, 30 minutes. We are looking at this business, 2.1. It is extracted as is. The business is owned by Mark Fit. It manufactures t-shirts. The year end is 28 February 2023. Now, we are going to refer to information A. We are going to see if we can calculate the direct material cost. That is for 4 marks. And then 2.1.2, we are going to refer to information B. What are we going to be doing there? Let us see. We are going to calculate the factory overhead cost for the year by completing the table in the answer book. And then 2.1.3, we are going to prepare the production cost statement for the year ended 28 February 2023. 2.1.4, we are going to calculate the cost of wastage of raw material. That is for 4 marks. And then 2.1.5, we are going to answer the question on problem solving regarding the problem the owner is concerned with. Right, so these are the questions we are going to be handling in our question 2 cost accounting. Now, let us look at information A. We are given our information A here. Raw material, fabric to manufacture t-shirts. Fabric is used from the storeroom to the factory for production. Next question, it says the weighted average method is used. Now, very important, grade 12. What are we noting here? We are noting that this business is using the weighted average method. What is that now? You got it correct. Some of you got it right. Weighted average method is the method where we take the total value, divide by total number to get an average price, and then we use that average price to determine the value of our stock. Okay. Now, we are given a caution here. They are saying that we need to note that 1.2 meters of fabric is required to make 1 shirt. So we have 1.2 meters that we are going to be using to manufacture 1 t-shirt. And then here's the information. We are given our information, our stock records. These are our records given to us. And these records are stated in meters as well as in a rand value amount. We have our stock balance at the beginning, which is 1,600 meters. M stands for meters, which equals to 64,800. And then we have the total purchases of 18,800 meters. The total amount there is 894,000. And then amounts available for use. Remember, how do they get the amount available for use? It is opening plus purchases. And then we get available for use. And then raw materials that are now actually issued to production. What does the word issued to production mean in this instance? It means this is the actual material we have distributed to where they are producing, to the production room. It is up to them now whether they utilize that material efficiently or they just waste the material. So we are going to find out later what happened. And then at the end of the year, we found that only 1,500 meters was left. And then work in process, we have the balances. We don't have any opening work in process, it's 0. And then we have the closing work in process. Information B, I'm going through this information so that we familiarize ourselves with this activity before we can get into the breaking down of each and every item. Factory overhead cost, the bookkeeper calculated factory overhead as 600,000. However, the following errors have been made and which must be corrected. Roman figure 1, it talks about the closing stock of factory indirect material, 7,000 was omitted. Roman figure 2, the total water and electricity cost for the year, 84,000 was included in the factory overheads. This should be allocated as follows. There is an amount for office, an amount for selling and distribution, an amount for factory. So there is 15, 25, 60. We are going to sort that one out. Roman figure 3, factory insurance of 45,000 was allocated according to the old ratio of 3:2:1:2. That is between the factory, the sales, as well as the office, respectively. But it should have been allocated using the correct, meaning the 1,500 square meters, the 300 square meters, and the 600 square meters is the correct allocation or correct ratio. They use the incorrect ratio. We are going to come to that and fix it. Information C, very important. Additional information, direct labor, 408,600. Roman figure 2, number of t-shirts manufactured, 15,000 units. 2.2, we are going to come to this at a later stage. We have Lightning Kings Pty Ltd. So meaning this is the other part. Remember, the cost accounting question will be divided into 2 parts. There will be that production cost statement and notes, as well as the theory of it. And then there will be that unit cost, meaning it has break-even point and other questions. So this 2.2, we'll look at it at a later stage. Okay. Now, this is the information for our second part. Remember, our cost accounting has section A for production cost statement and notes, has section B for your break-even point calculations and other unit cost calculations, analysis, and interpretation. Great jobs. I hope we are now 50% familiar with the activity. Let us now break it down. We are going to work it out, do one item at a time. I will display the information relevant, and then we are going to try and work it out together. Okay. Now, let us look at the worked solution for the paper that I just displayed. Now, the first one, what are we expected to do here? Let us look at the instruction on top. It says, calculate the direct material cost. I'm just going to give you just 2 minutes for you to calculate the direct material cost. And then we are going to look at our question, our solution. Right, now what information are you given? You are given that the business uses the weighted average method to determine the value of fabric. And then here's the information given to us. Can we now use the information to calculate the direct material cost using the weighted average method? So you'll have 2 minutes to calculate that. The time starts now. Grade 12s, welcome back. I hope you are done with the calculation. Let us see if you've done it correctly. I know some of you have got it correct. Now, what is the first thing that you were supposed to do? You were supposed to calculate the average price first. Why are we calculating the average price? Because the price is not given anywhere here. So, and then we are also told that we are using the weighted average method. That is the first thing we're supposed to do. Now, how do I calculate my average price? What would be my formula? My formula will say my total value divided by my total number. Okay, what is my total value? You can see in navy there, my total value of my stock. How do I get my total value? I will say my opening stock plus my total purchases. Okay, and then I divide that by my total meters, meaning my formula changes now to total value divided by total meters. What is my total meters? There I have my total meters. How did I get my total meters? I set stock balance of meters of 1,600, and then I added all purchases of 18,800, and then I got my 20,400. And then from there, I get my average price to be 47 rands. Now, what do I do now? Because I want direct material. Remember, what is the definition of direct material? Direct material is the material issued to production. So when we say raw material issued to production, we mean what? Direct material. Remember that definition? What is direct material? Is the material issued to production. So now we take the meters issued to production, multiply by 47 rands, which is our average price, and then we get 888,300. That would be our answer. So we have our 4 marks. Happy? Got it. Right. So now, grade 12, what are we learning from this? We are learning that as we prepare our cost accounting, don't forget to prepare your stock valuations, because we are now using the skills of stock valuation to get certain figures under the cost accounting. Next question now. What are we doing now? Let us look at the question. Calculate factory overhead cost. What are we given? Let us see. The bookkeeper calculated the factory overhead cost as 600,000. However, he made the following errors which must be corrected. Now, let us solve transaction number 1. I'm going to give you 30 seconds to decide on what to do with transaction number 1. Let us read it together first. The closing stock of factory indirect material 7,000 was omitted. Now, can you now do this? Let us look at that. How do we calculate this one? We are using, remember, we are given our formats. This is my factory incorrect total. Our incorrect total is 600,000. Now, what are we doing with the 7,000 for indirect material into this factory overhead amount? Just 15 seconds now for you to decide, because I've already written a few items for you. Remember, grade 12, this is a revision class. We must all work. We must all work. You use your worksheet for you to calculate. Ensure that you move with me as I'm moving with this activity. If I calculate, you calculate. If I write, you write. Right now, you are the one doing the writing and the calculation. Right, I hope some of you got it right now. I'm just going to clear everything for us to be able to work. Right, now, the 7,000 is my closing stock. What do I do with the closing stock balance? What must I do with the closing stock balance? Closing stock balance must always be subtracted. You got that? Closing stock balance must always be subtracted. Now, what were you taught? How do we get our indirect material? Remember, for the indirect material, I must say opening plus purchases minus closing stock. Now, this is my opening. My opening is 0 plus my purchases. How much is my purchases? It is also 0. It gives me an answer for indirect material. What will be my answer now? It will be 0 plus 0 minus 7,000. If you punch it on your calculator, it will give you a negative 7,000. What does that mean? It means that I need to subtract my 7,000. Let us look at that. Meaning we are going to have indirect material, and then we say minus 7,000. Okay. So we got that one right. Is everyone happy about that? Thank you. Right. Next one. Calculate the factory overhead cost. We still continue with our activity now. Still dealing with the same factory overheads. Let us look at this transaction now. The total water and electricity cost for the year, 84,000, was included in the factory overhead cost, meaning we included the total. Remember, under factory overhead, we shouldn't include the total, but we should include only the portion of factory. Factory overhead, we only record something written factory, a cost written factory. If it's not written factory, or if it's not allocated to factory, then we cannot put it under this item of factory overhead cost. Now, let us see how we work this one out. Can you work it out now for a minute? Just giving you 1 minute for you to work it out. Right, I hope you got it right, creators. Let us look at how this is supposed to be done. We're supposed to be having the 84,000, which is our total cost for water and electricity. And then remember, our percentage that we're supposed to allocate is supposed to be 60%. So we first calculate that 60% of the 84,000, we get 50,400. Now we say 84,000 minus 50,400, and then we get to have how much? 33,600. Meaning, this is what we have done. We have overstated this water and electricity cost. So we recorded more. We recorded 84 instead of 33,600. So we recorded 84,000 instead of, meaning we recorded more. So we have to reduce that particular amount. Instead of 50,400, sorry about that. Instead of 50,400, we recorded 84,000. So we must reduce the amount. That is why it's a minus here. We must reduce the amount by how much? By 33,600. Okay. Now, I hope you got that one right. Let us move on to the next one. This says factory of 45,000, factory insurance of 45,000 was allocated according to the old ratio of 3:1:2. This is an incorrect ratio. It's not right. So 3:1:2 is not correct. It's an incorrect ratio. We allocated using that ratio. It should have been allocated according to the correct ratio. Our correct ratio says 1,500 meters, square meters is to 300 square meters is to 600 square meters. This is the correct ratio. Now, how are we supposed to work this one out? Let us look at the calculations now. First thing we need to do here, just clear everything. First thing we need to do is to take the old ratio, 3:1:2. We add all of this, it gives us 6, right? 6 becomes the total for our ratio. Now, for us to go back and find out how much, because the 45,000 represent the ratio of 3. Let us first get the total. How do we do that? We take 45,000 multiplied by, remember the formula, what I want on top over what I have below. So it is 6/3. And then we get back the 90,000. So 90,000 is now the total insurance as stated here. Okay? Total insurance. Now, after having the total insurance, then we can now work it out. We can now reallocate. Okay. Now, how do we reallocate this? We are now going to take the 90,000 multiplied by 1,500. Now, 1,500 is our factory allocation, the correct allocation. Divide by 2,400. How did we get the 2,400? We said 1,500 square meters plus 300 square meters plus 600 square meters, just like we did on the old ratio to get 6. So when we say 1,500 plus 300 plus 600, we get 2,400. Okay, now 2,400 becomes our total square meters or total ratio for these square meters. Okay, now we divide by 2,400. Why are we dividing by 2,400? Because 2,400 represents the 90. Okay, now we get 56,250. How do we adjust our work now? We are going to say 56,250, which is now the correct allocation. That is what we were supposed to record, but we recorded only 45. So this money was understated. So we recorded less. We were supposed to record 56,000, but we ended up recording how much? 45,000. So less costs were charged to this ledger account. So meaning the difference gives us 11,250. Now we need to add because it's understated. Remember, we add understated amounts, we subtract overstated amounts. So this links with our reconciliation. Right, just gonna clear this. Now let us look at how this is supposed to be recorded now. We record insurance and then we say 11,250. What are our workings? 56,250 minus 45,000. Then we get 11,000. So we are going to add 11,250 for obvious reasons, for the fact that this amount was understated. Okay, it was understated, so we add for that reason. Okay, next item. Now let us look at our full factory overhead. We are done with our factory overhead. Now remember the 7,000 that we subtracted earlier? It was for the indirect material. Water and electricity, the amount that was overstated, we recorded 84,000 instead of recording 50,400. And then insurance, we just did it now. So we add this one, subtract. And then when you do your calculation, 600,000 minus 7,000 minus 33,600 plus 11,250, we get our answer to be 570,650. So now this amount, remember, once you record your total, immediately go to your production cost statement and record that answer there. Okay. Now we are going to look at our production cost statement. What we'll do, hope you won't be confused, we're going to first break it into smaller pieces, meaning 3 items, 3 items, 3 figures. 3 figures, 3 figures. From there, we're going to display the full production cost statement. Grade 12s, I hope everyone is with me. Now, let us look at our production cost statement. The next question says we must prepare the production cost statement. Now, our production cost statement, we're just going to give you a minute for you to think about the format of the production cost statement. Just 1 minute, write down the full format of the production cost statement. Great jobs, welcome back. I hope you managed to write down the format of the production cost statement as fast as you can, because there is one thing that you must know how to do when you are dealing with this topic. Right, now let us look at the first part. Already we have calculated our direct material cost. You remember earlier on, it was the first thing that we have done. We got our 888,300. Direct labor cost is written on your answer book. It was also given at the bottom of your question. Now, how do I calculate my prime cost? Remember, I say direct material plus my direct labor. Then I get the 1,296,900. Meaning the first three items in my format for production cost statement is direct material cost plus direct labor cost. That gives me my prime cost. Now, we can decide to twist it around and say, how do I get my direct material cost if I'm not given the direct, if I'm only given the direct labor and the prime cost? Remember, if I'm going up, I would say 1 million, which is my prime cost, 1,296,900, and then minus my direct labor cost. This gives me my direct material cost of 888,300. Okay? Now, how do I get my direct labor cost if I'm not given? I will say my prime cost again. My prime cost minus my direct labor cost. This gives me minus my direct material cost. This gives me my direct labor cost. Okay. So meaning if you say prime cost minus direct material, you get your direct labor cost. If you say prime cost minus direct labor, you get your direct material cost. Please know how to play around with these figures. Okay. Know the bottom up method. Right. Then now I'm just going to clear here, and then we move on. Now we're moving to the second portion of our production cost statement. Remember, we were at prime cost. The 576.50 is an amount that we have calculated, if you remember well. But now, when we take our prime cost plus factory overhead cost, then we get our total cost of production or total manufacturing cost. So we add the two, we get our total manufacturing cost of 1,867,550. Next part of our production cost statement. Now we are on the total cost of production part. Remember the one where we said prime cost plus factory overhead cost. Then we got our total cost of production. If you remember well from our activity, there was no work in progress at the beginning. So we have it as 0. Our total becomes 1,867,550. We do not write anything on this part. Okay. Right, next part, which is our last part now, will be from the 1,867,550. And then now, remember, we were given work in progress at the end, but at the beginning it was 0. So we just take it from our work, and then we get our total cost of finished goods. How do we get total cost of finished goods? Remember, we say 1,867,550 minus 235,500. And then we get 1,632,050 rands. Okay, so this is our production cost statement. Now let us view the full production cost statement from what we're doing. This is what we have done already. We have done this. Let us look at these figures. We have done all of this. So this is our full format for our production cost statement. Remember, in our previous lessons that we've been having during the year, we have fully discussed the formats of production cost statement, statement of comprehensive income, statement of financial position, and all the other statements that we have in accounting. Now, let us move on. Now we are moving on to the next part of our work. The question here, what does it say? Let's look at this. Calculate the cost of wastage of raw material. The owner is concerned about the wastage of material. Now let us calculate the cost of wastage. Remember what we have done earlier? We said the business is using the weighted average method to determine the value of fabric. And then note, we have 1.2 meters that will be required for us to make one t-shirt. Let's look at the information given to us. We just extracted the information we need for us to work. Meters available for use, 20,400 meters. And then the value of that is 958,800. And then raw materials issued to the factory, remember, 18,900 meters. And then stock balance at the end, 1,500. Very important. Number of t-shirts produced or manufactured was 15,000 units. Now, how do we go about doing this activity? First of all, because we are using the weighted average method, we're supposed to think back and remember how we calculated our average price. Remember, it was total meters, total value, divided by total meters. Okay, then we got the 47 rands. Next part now that we know we have 47 rands, now we can break this down into smaller pieces. Remember, meters that we issued to the factory was 18,900. Now, how many meters did we actually use for us to produce 15,000? Remember, we produced 15,000 units, and then we needed what? 1,2 meters. So 15,000 multiplied by 1,2, then we get 18,000. Okay, so meaning the meters that we issued to the factory was 18,900, but out of that, we only used 18,000. I hope you get that right. You got that right? Now, what is the difference now? The meters wasted now. Meters that we have wasted, 18,900 minus 18,000. Meters wasted would be 900. Meaning, if the question was saying, how many meters did we waste? We're going to say 900. But what is the cost or the value of that wastage? We say now 900 multiplied by 47. Why multiplied by 47? Because the business uses weighted average method. So we must use the weighted average price to calculate the value of our fabric. So the answer becomes 42,000. Okay. There are other methods of getting the 42,300. We are not going to dwell much on them so that no one is confused. Now, let us move on. Now, let us look at this question, internal control. Mark is concerned about the increase in the cost of raw materials over the financial year. Provide two strategies that Mark can use to address the problem of wastage. Okay, now what can you do for you as an owner to ensure that your workers do not waste material? First of all, we need to improve training of factory workers, because you can't say factory workers must save material if you have not trained them. You must first do what? Train them. And that training must be quality training. It should be value for money. Number two, we are going to use cutting technology, meaning we get machines where we are going to cut that fabric using the machine. We can also order the fabric that is already cut for us so that we don't waste. Remember, they need to do measurements of meters, how many meters would they need for them, or how much meters would they need for them to produce maybe a dress or whatsoever that they are producing. Now, we're also going to ensure that we order better quality from a cheaper supplier. If possible, we change a supplier. Next one, we regular service our machines, or we maintain our machines, right? And then we can also pay bonuses or any incentives to also ensure that people do not waste. Any employee that has saved on our material may receive a bonus. And then we also monitor them, very important. Whenever they are working, cutting, producing, we do what? We stand there, we monitor them on a daily basis or on a regular basis. Okay. Right, so these are the questions that we need to expect. Remember, these questions are also relevant to our stock valuation. Okay, so these are the questions that we normally find under stock valuation, under budget, under so many topics. So it is important that you get ready, you are prepared for such questions. Please don't leave a space in such questions. Please write something there. It's very important for you to write something. Do not leave space, because if you leave space, then you don't stand a chance at all. But if you write something on theory questions, you stand 50% chance for you to win on that particular question. It's very important. Right, so we are done with our question on the internal control and our cost accounting. Let us look at the second part now. Now, here it says calculate the break-even point. I'm just going to allow you to take just 2 minutes for you to calculate the break-even point for 2023. Please calculate the break-even point for 2023, meaning you are going to use the figures for 2023 for this Orion Factory A to calculate our break-even point. Just to assist you a little bit, remember our formula says fixed cost divided by selling price per unit minus variable cost per unit. This is our formula for break-even point. Can we now use the formula, substitute, calculate our break-even point? We are trying to prove that the break-even point that is there is indeed correct. Great, welcome back. I hope you did win here. We are trying to prove the 149,145, whether that amount is correct. We are trying to prove those units. How do we calculate that? Let us look at that. We are going to say 2,982,900. Remember, for those who may be confused, there is the amount, that is our total fixed cost, divide by our selling price. Where's our selling price? Do you see it? 46 rands minus our variable cost, which is our 26 rands. Remember, this is called what? What do we call this? We call this as contribution per unit. That is the name of that. So selling price minus variable cost per unit is called contribution per unit. So if you do this calculation, grade 12, you will get your answer to be, your answer would be 149,145 units. Okay, I hope we all got it, that one correct. This is the basic calculation. What am I trying to remind you here? I'm trying to remind you that the break-even point calculation may be part of your paper 2. The formula for break-even point is there at the back of your formula sheet. Now, next question. Internal control here now. It says identify and explain 2 cost items with figures that may have contributed to the increase in the cost of production per unit. Provide a reason for in each case. Note that the inflation rate is 7%. Why do they give you that inflation rate of 7%? We are trying to say to you that anything that is increasing in lessons between 0 and 7%, then that is not a worrying factor. Any cost increasing above 7% is now a worrying factor. That is what we need to quote. For an example, let us look at our direct material. What happened to our direct material? Our direct material, if you can check your direct material, it was 10 rand 20. Just giving an example of this direct material. It increased to what? To 10 rand 60. Let us check whether this is a worrying factor or not. We say now 10 rand 20 or 10 rand 60 minus 10 rand 20. We get that the increase is 0.40. Then there is the increase between the direct material of 2022 and the direct material of 2023. Now, for us to get an increase, we say 0.40 divided by 10 rand 20 times 100 to see what is the percentage here. Times 100, our percentage becomes 3.9. If you can check here, your direct material increased at a percentage below 7%, meaning we cannot quote direct material. It's not a worrying factor. It got the increase within the acceptable range. Remember, it's between 1 and 7%, it's acceptable. That is the inflation rate. Anything increasing above 7%, that becomes now a worrying factor. Then we must quote it. Now let us look at the possible responses now. What do we need to quote? Is the direct labor. Direct labor increased from 6 rand 70 to 11 rand 20. 6 rand 70 minus 11 rand 20 becomes an increase of 4.5. So it increased by 4 rand 50. So if you can say 4 rand 50, divide by 6 rand 70. That increase becomes 67%. So this is a 67% increase. So 67% increase is too much. It's more than the 7% inflation rate. So what are the reasons for this huge increase in the direct labor? We may not be monitoring our workers, so there's poor supervision. Maybe these workers are working excessive overtime, and then there's also lack of quality training. Maybe these workers are unskilled. They don't know how to become efficient at work. Right. Now, these are some of our responses. Let us look at the second one now. The second cost that may have increased would be the factory overhead cost, moved from 11 Rand 64 cents to 14 Rand 20. If you can check here, how do I calculate the difference? I say 11 Rand 64 minus 14 Rand 20. For those who may be struggling with the calculation of the percentage, if I say 11 Rand 64 cents minus 14 Rand 20, we get 2 Rand 56 cents. That is the difference. Now, meaning this increased by 2 Rand 56 cents. Okay? Now, how do I get the percentage? I say now 2 Rand 56 cents divide by the old price. Where is the old price? Which is the 11 Rand 64. That is the old price times 100. Why am I doing this? For me to get the percentage. So 2 Rand 56 divided by 11 Rand 64 cents times by 100. And then we get 22%. You see the increase here? It is by 22%. This is also more than the 7% inflation. This is why we decided to leave out direct material and quote direct labor and factory overhead. Okay, now what could be the reason? There may be the drop in production levels, because we've seen it. Our production dropped from 2022 to 2023, and then factory overhead cost remained the same while there was a drop. Next one, there is poor supervision in the production, and then there's also these economies of scale, meaning there was wastage. We spent more but produced less. There is these economies of scale. What is economies of scale? It's where we spend less and produce more. There is economies of scale. Okay, right, let us look at that. How do you see economies of scale? You see by fixed cost per unit dropping, but production increasing. But here, it was not the case. Fixed cost per unit increased while production decreased. So that was these economies of scale. Now, we are now going to step off cost accounting. We are now going to focus on our cash budgets or a budgeting topic. We are going to use a paper extracted from November 2023, paper 2. I hope everyone is now comfortable with cost accounting. We have so many lessons that we have already put available for you during the year. We have done so many live lessons on our cost accounting. Please also refer back to them for your own revision. Now, we are on the budgeting topic now, extracted from the November 2023 paper 2. Now, let us look at the information. Our information given, it relates to Sunday Stores Pty Ltd. The business is owned by Adam Stevens. First question 3.1. We refer to information B. Identify 2 items that were incorrectly recorded in the cash budget. And then second question, identify 2 items in the cash budget that would not appear in the projected income statement or projected statement of comprehensive income. And then 3.2, we are going to revise on how to prepare or complete our debtors collection schedule. And then from there, 3.3, you are going to work out the Roman figure 1 up until Roman figure 4. Now, this is the additional information given to us. We have this information A as well as information B. And then information C, it's about the collection pattern that we collect 40% in the same month, 50% second month, 8% in the third month, and then 2% we write it off. Very important, credit sales are only 60%. What is cash sales? Cash sales would be what? What is the percentage of cash sales? Yes, you got it right. It's 40%. Meaning total sales will be 100%. So total sales will be 100%. Information D, purchases of stock and payments to creditors. The markup percentage is 75% on cost. Stock is replenished or replaced in a month of sale. A base stock is maintained. All purchases of stock are on credit. Very important. So meaning 100% is credit. There are no cash purchases here. And then now, what is the pattern, payment pattern for the creditors? We pay creditors in full 2 months after the purchase month. Meaning when we buy in January, we pay them back in March. Okay? This transaction F talking about rent, which increased by 13% from 1 December. Transaction F, savings account, which will be increased by 84,000 on the 1st of December 2023. And then there's an interest of 4% per annum, which is not capitalized, which is receivable also at the end of each month. Okay, there is interest on savings account. Now, let us look at the worked example or solution of this question paper that I've just explained. Now, first question says, identify 2 items that were incorrectly recorded. Which items in this cash budget prepared for us that was not supposed to be entered there? Anything that doesn't belong here, any item that doesn't belong, I'm just going to give you 5 seconds to identify one and 5 seconds to identify the other one. Okay, so I'm giving you a total of 10 seconds. 10 seconds starts now. Let's identify those 2 items. Some of you got it right now. Right, let us look at those items. The first one will be the discount received. Remember, discount received is part of projected income statement, but not part of cash budget. Second item will be the bad debt. That is part of operating expenses under projected income statement, not part of cash budget. Next item will be depreciation, part of operating expenses in your projected income statement or projected statement of comprehensive income, not part of cash budget. Why? Because all of these items are non-cash items. Remember, in the cash budget, we only record the cash items. If an item is non-cash, we do not enter it in the cash budget. Now let us look at the second part. What are we expected to do here? 2 items in the cash budget that would not appear in the projected income statement. What are these items? Let us look for them together. Some of you got them already. They are in the cash budget, but would not be part of the projected income statement. Number 1 will be our cash from debtors. Number 2 will be payments to creditors. So there are our items. Okay? These 2 items are not going to form part of the projected statement of comprehensive income. Okay? Right, next question. Here we need to complete our debtors collection schedule. Okay, now let us look at this. debtors collection schedule. Let us look at the information given to us. They said here, credit sales comprise 60% of total sales. We are going to work this one together for us in order for us to save time. Right. 40% is collected in the very same month. 50% in the second month. 8% collected 2 months after. Now, let us look at the month of September. I am now selling in September. When do I start collecting if I sell in September? I start collecting in the very same September. Okay? Now, what is our question? Complete the debtors collection schedule for December. So our focus is only in December. Anything affecting December. I'm starting with September. I sell in September for 535,500. Fortunately, it's calculated for me. So it means I will collect 40% in that month of September. Okay. I collect 50%. What is the month after September? That will be October. It's not part of December yet. And then after collecting 50%, I collect what? 8% in the month of November. There is the amount where they've said 535,500 multiplied by 8%. Then we get the 42,840. Then from there, it will be the 2% that must be written off. So if the question can say how much bad debt must be written off, we would say 535,500 multiplied by 2%. So meaning there is nothing collected in December coming from the credit sales of September. Okay. Now let's come to October. October, I've sold for 640,500. And then where do I start collecting? On the very same month, I collect 40% in October. Not part of my period. I collect 50% in November, already recorded for me, meaning this is my 50%. And then after collecting 50%, I must collect what? 8% in December. So what will be my calculation now? It will say 640. This is my October collection. 640,500 multiplied by 8%. Let us calculate together. 640,500 multiplied by 8%. Then we get 51,240. This will be recorded in December. Okay. Now, after collecting 8%, I must write off 2% when in January. It's not part of my period. Now, I'm moving to November now. November, I have my 651,000. For November, I start by collecting 40%. Remember, everything starts at 40%. So I collect 40% in November. November already is calculated for me. This is 40% already calculated. After that, I must collect 50%. When do I collect my 50%? In December. Now I must show that calculation. 50%, so 651,000 divided by 2, which gives me 325,500. That is 50%, right? So I would record now this one because it belongs to December collection. Now I'm moving on to December now. December, obviously December, it's after November, so there shouldn't be any recording in the November. Now I start in December now. What did they say? I'm collecting 40%. So this is my December collection. Obviously, because I'm collecting on the column of December, I will have to write this one. So it's 682,500 multiplied by, I'm collecting 40%. Remember, when we collect 40%, we are going to give out discount of 5%. So meaning that we are not going to collect 100%, but we collect 100 minus 5. So we are only collecting what? 95%. So we say multiplied by 95 over 100. Then let us do our calculation now. 682,500 multiplied by 40% multiplied by 95%. Then we get 259,350. Okay, now, so we record it here, 259,350. Now, we are going to add all our answers. Remember, for you to get the last mark, you should have added all of these. So now, I'm saying 51,240 plus 325,500 plus 259,350. Then we get 636,090. Okay, so that becomes our collection for December. So our collection is better than the collection from November. Okay, now here, this is our debtors collection. This was just a quick revision. On our next session before you write your paper 2, we are going to try and look at some of these items. Okay. Now, next part, it says calculate the discount allowed in November. So we want to calculate the discount allowed in November. Now, how do we do this calculation now? We are going to look at November. Remember, November we sold for 651,000, and then the collection is already given to us. It is 247. Remember, 247,380 is not a full amount. It is an amount minus 5. So this is an amount of 95%. So I'm looking for discount. My discount is equivalent to 5%. And then my 247,380 is equivalent to 95%. Now, for me to get the discount now, I will say what? The amount given, which is 247,380, multiplied by 5 over 95, because I'm given 5 and then I'm looking for 95. That is how I get my discount of 13,020. There could be so many ways of getting the 13,020. We are not going to look at that right now. Right, and then now let us move on, because this should be an easier one of getting this, and it's more quicker for you to use. Next one, we are going to be looking at our cash budget. I want you now just to take 2 minutes to write down the format of your cash budget before we can move on. Just write down the format without even referring. Just 2 minutes. Right, I hope everyone managed to write the format of the cash budget. Let us now move on. Let us look at this one. Calculate the interest on savings account in December. Now, what are we given here? The savings account will be increased by 84,000 on 1 December. Interest is at 4% per annum, which is not capitalized and receivable at the end of each month. So we are looking for the interest from our cash budget. Now, how do we go about doing this now? We take our capital amount, which is our savings account amount, multiplied by 4%, multiplied by 1/12, and then we get an answer to be 280. So that is our savings account, the new savings account interest. Okay, now we are now going to add it with the old one because the old savings account is still there of 1,200. We're going to receive that interest, meaning our total interest that we have received becomes 1,480. Right, next part, calculate the payments to creditors in December. Now, let's look at the information given to us. We are given the sales amount for October, November, December. Now, when are we paying our creditors? Let's look, they said here, the markup is 75%. Why are they giving us this? So that we can calculate cost of sales. That's why you are given this information. Stock is replaced in the month of sale, and then all purchases are on credit. Why are they giving you this? So that you can calculate the amount of payments to creditors. And then importantly, our creditors are paid 2 months, meaning if I buy in January, I pay in March. And then if I buy in October, then I must be able to pay in December. That is 2 months to come. Right, let's look at this. Very important, cost of sales, for you to remember this, is the same as purchases. Meaning when you have cost of sales, it means you have your purchases. Now, which sales are we going to use now? We are going to use the sales of October. Why the sales of October? Because they said that if we buy in this month, we must pay 2 months later. Meaning we bought in October, we're going to pay in December. And we are calculating payments to creditors for December. Why is it 100 divided by 175? Remember what you learned in grade 9? Sales is markup plus cost price. Cost price is 100%. Markup, it will be given depending on the business. This time it's given is 75. So how do I get selling price? It is 100 plus 75. Okay. Now, what am I looking for? I am looking for cost. Meaning 100 is on top, divide by 175, because 1,067,500 is my sales. So I put 100 on top and then 175 below. And then my answer becomes 610,000. Meaning it's 610,000 multiplied by 100 over 100 for the credit purchases. They said credit purchases are 100%. So it becomes 610,000. So that is our answer. Okay. Now next item. We are here. We are here to calculate now the cost. The rent expense for November. You are given the rent expense for December. And then we are given the transaction that rent expenses are expected to increase by 13% as from 1 December. Meaning this 31,000 is after increase. This is after increase. This is before increase. Okay. Now, remember, after increase, this is supposed to be 113. Okay? Where is 113 coming from? It is the 100%. Remember, if something has not increased or decreased, it remains at a full percentage. What is the full percentage? 100. So 113, we got it by saying 100 plus 13. What is before increase? It is 100%. Now let us look at this. How is this done? So meaning now we say amount given multiplied by the percentage we want, the percentage we do not know, divide by the percentage we know. Okay, then we get our answer too. So here we are just reversing. Meaning, if I was looking for the December amount, what was I going to say? I was going to say 28,000 multiplied by 113 over 100. This gives me 31,640. So this is for December, this is for November. Okay, I hope everyone got that one right. That is for our rent expense. Right, grade 12s, I hope you did enjoy the two topics of cost accounting and budgeting. Thank you for watching this lesson.